welcome all of you. And first of all, our deep appreciation to Morgan Stanley for allowing us yet again to host today's event in these conference facilities. Thank you. Now today we have two keynote speakers on two different perspectives of microfinance. Both of these are very interesting topics, and one of them is a very long topic, I'm told. So we have to manage time. And though we are going to allocate only 20 minutes to each speaker, followed after each speaker for 10 minutes of Q&A, I'm sure there will be a host of questions that will be raised to you during the refreshment time, and perhaps you can very quickly either get the emails or you can answer the questions, whatever you please. So, since you must have read the profile of each of the speakers, I will avoid giving their background. Now, the latest SIGA posting, really speaking, talks about strategies for next 5 years. And one of the strategy is, of course, promoting effective and responsible funding for financial inclusion. Am I out of hand? So, our first speaker is Ramakrishna, who is founder and CEO of Run Day of the blue color, right? And he will, of course, address on the very first topic about financial inclusion in India and how internet is being used to promote the financial inclusion. Whether it is similar to Kiva or dissimilar to Kiva, I do not know, but I invite you to speak now. Thank you.
Good evening. Rangdi, I just want to give you a quick sort of a personal background to how it all started. I and my wife used to live in Kidlington not too long ago, 4 miles from Oxford. And we had this sort of this desire to go back to India and start something. And if you come from a country like India, you're actually spoiled for choice. There's so much you can do. You can spend your entire lifetime fixing a problem or changing or defining a new system. So after several brainstorming sessions, dinner table conversations, we looked at microcredit, largely because this was the year 2006 when Mohammed Yunus, the announcement was made that Mohammed Yunus and the Grameen Bank have won the Nobel Peace Prize. So our initial reaction was, well, Bangladesh needs microcredit, India doesn't, because we belonged to that school of thought which said, India is doing fairly good. So when we Googled it a bit, we came across an article which was published in 2004, and we were reading this article in 2006. It spoke about how borrowers of a microfinance institution in Hyderabad, it's the capital of Andhra Pradesh, some of them had committed suicide. And this was way back in 2004. The article went on to say that the district collector of Hyderabad passed an order saying that all the borrowers who have borrowed from this microfinance institution need not pay them back. There was a big hue and cry. The thought leaders in the sector, Vijay Mahajan, Vikramakula, came rushing to him and he said, well, how can you pass this order? It's a sunrise industry, the sun will set. So the district collector said, I understand what you guys are doing. I understand what Mohammed Yunus is doing in Bangladesh, but help me understand this, that how can you justify interest rates of 50% plus and call it microcredit? So the borrowers who committed suicide were paying 50% APR. And so he said, I'm not taking my order back. And he said, you need to go back, think about your own strategy, and look at lowering the cost. So, and we were reading this article in 2006, and we realized that there was not much which happened between 2004 and 2006. There were a lot of white papers, there were a lot of discussions, panel discussions, but nothing much. And we started looking at it a bit more closely. We noticed that there were two costs. If you look at a microcredit loan, there were two parts to it. One was the cost of capital and the cost of operations. And Mohammed Yunus had come out with his book by then, and which is, he beautifully described it. He actually had a cookbook for microfinance. And according to this cookbook, he said, your cost of operations should be 9 to 12%, and you add the cost of capital to it, and that should be the cost of borrowing. And if you're doing anything else, then please don't call it microcredit. Call it something else. So that got us thinking, and we said, can we do something to really lower the cost? And we Googled it a bit, and it was not hard to find Kiva. We were thrilled. We said, this is fantastic. It was a great model. And we started looking at their model and said, what are they doing about interest rates? And we looked at it a bit more closely, and we realized they were not doing much. They were raising capital at 0%, they were providing capital to their partners at 0%, but the partners had freedom to choose the rate at which they were lending. So as a consequence, it really didn't make an impact. And that's how it all started. And that's how the idea born, sort of started taking shape. We looked at funding, we looked at people who could fund us, and then we painfully realized that ideas don't get funded. And then we said, let's build a prototype. And we put our own savings of £6,000, and then CDs of a lot of, I think we were very lucky, there were a series of events which led us to finally get funding from ICICI Foundation. And then we went back to India and we set up Runway. So very quickly, given that I want to make it as interactive as possible, I will try and really run through, I've got a very quick presentation. I want to really talk about what Runway means. I know it does mean giving colors and sharing colors, different connotations, but it's got a very powerful connotation. So when India was fighting for its independence, there was this bunch of freedom fighters who were just 20 odd, 20, 21 years old, and they came up with this word, Runway, and they actually wrote a lot of poems. There was actually a blockbuster which was made called Runway Basanti. What it essentially means is, so it means that you're giving a part of yourself for the country. So you're it's the highest form of empathy. So you're empathizing with your country, and you're giving not just your time, not just your money, but giving a part of yourself. So it's got a very strong connotation, and that's what it stands for. So I'll just quickly run through these slides. Our focus is clearly livelihoods, education, and there's another big, huge missing piece in India especially, and it's a blue ocean out there, that's healthcare. There are a lot of lives which can be saved, which can potentially be saved by giving access to credit, or just capital at the right time. So this is how the model works. So Runway is more like an intermediary between an individual or corporate who want to give money, who want to lend money, and we connect them with a set of field partners. These are civil society organizations, NGOs across India, whom we select after careful due diligence, and we get them on board. So what Runway does is we have an online platform. It's got a core banking architecture. The engineers who built our platform are the same engineers who built Finacle, an award-winning banking product in India. And the interest rates we charge. So when we started, honestly, that was a year, if you remember, 2007, when we did a road show in India, in Delhi. And people ridiculed us. They said, well, the cost is not which really matters, it's the access to credit. The cost is, so they subscribe to a school of thought. And, in some sense, we believe right from day one, we said, the cost really matters because if at all, the purpose of microcredit is to give them a good chance of escaping poverty, then it has to be low. And therefore we felt that we should regulate the interest rates. And we, initially, in the initial years it was tough, but then as we moved on and also the crisis in the sector, we started to see a lot of traction. So microcredit, these are small, tiny business loans. We funded 250 different business activities. The interest rate a borrower pays on the ground is 15.3% APR. For education loans, this is primary and secondary education, the children go to low-cost private schools. These are budget schools. They're typically like tuition centers, but they get high-quality education. Parents prefer these schools because they think that quality is much better than government schools. They pay 9% APR. We also do micro-venture loans. These are for artisans who have access to markets, but they don't have access to finance. So it's just-in-time working capital. And these are guaranteed by our partners because there's ready order which needs to be completed. And those are at 80% APR. Well, it was painfully slow. I mean, these are the numbers after 5 years of being around. We've had about 4,980 social investors, 150 million rupees we've sort of disbursed so far, and 21,000 loans, 21,433 loans, and we've done it across 15 states. So this is how we have grown over the years. This is how the numbers look. Okay, so Saraswati Devi is an amazing success story. I know there are these whole theory of how does it really impact, and there are different perceptions about impact. At Rangdev, we've been very conscious of partnerships and also the communities we work with. We explicitly ask our partners to identify communities who have never borrowed before. So these are communities who have never been offered credit before. In many cases, first-time borrowers. If you look at our portfolio, we have the stats on our homepage. 50%, more than 50% of them are first-time borrowers. Saraswati Devi is one such borrower who borrowed for the first time, a first-time entrepreneur, who got trained on entrepreneurship by our partner, and she went on to set up a village-level service center, which is providing odd services apart from grocery, apart from booking tickets and stuff like that. And she went on to actually become a role model for the entire community. And she was so excited about this, this whole entrepreneurship, that she started motivating other women in the group and the whole community. And she was responsible for mentoring 100 more women in our community. And that did not go unnoticed. She won the state award from the Chief Minister of Jharkhand for her achievement. But that was, I think, pure coincidence that she was funded by Rangdev loan, but we were privileged to hear that. And then Nati Bondal, she is actually, so she was part of a family who were into cattle farming, but she wanted to start off on her own, and she took a loan to buy. She took a loan to buy goats, and and for her that was life changing in many ways, because she said, "I'm now adding income to my family." Again, there are many such stories. And Savitri Panja, she is a single mom, has a daughter who aspires to be a nurse, and until she got a loan from us, she was working with an intermediary who used to give her work, and she didn't have the working capital. She took a loan, she got the working capital to buy the raw material, and therefore better margins. And she's from Manipur. So, we have spent a lot of time building our online strategies and offline strategies. When we started initially, we thought, we should just focus on a social mission, and very soon we realized that would not suffice. So over the period of time, we built competency within Rangdev. So one such initiative which we did, which took us to the front page of the India's leading newspaper, was a campaign which we did during the World Cup. So it was quite a ridiculous idea. So what we did was we said, every time Sachin Tendulkar scores, he hits a boundary, then you could pledge to give us $1,000. If Sachin Tendulkar takes a wicket, then you pledge to give us $10,000. So when India qualified for quarterfinals, we started running this campaign. And then very soon it started getting, it went viral. And then, fortunately, India started getting it went from quarterfinals to semi-finals. And then in about 10 days, we raised 1 million rupees. And entirely on Twitter.
Ram, just help us with the exchange rates.
1 million rupees is about, okay, that's 10,000 pounds. About 25,000 pounds, yeah. 25,000 pounds. Oh, actually not
25,000.
11,000.
Yeah.
It's 11.
Yeah, 11,000 pounds. 11,000 pounds. And we did a campaign during Diwali. So I think we are learning the ropes clearly. So what we're trying to also do is set up chapters of volunteers. We have a very active chapter in London who come to support fundraising, they run marathons. We also have brand ambassadors. One of them who's actually very active in London, in the UK, is Raghu Dixit. He was part of the Golden Jubilee celebrations. He was one of the singers who was invited to sing. We also got some recognition on the way. The most recent one was, we recently won a World Bank Development Marketplace Award to scale runway in 2 specific geographies. That's about it. So I'll stop now, and I'll be happy to answer any questions.
Robert Stone, Oxford Policy Management. Nice idea. You're talking about 150 million rupees, which is about just under £2 million, right?
Yeah. Yeah.
In terms of costs, the thing that strikes me as the potential constraint is that you have to screen the investee, the people in whom you're investing. If you're going to scale up to, I mean, £2 million is not a lot of money in India, right? Nor is 24,000 investors. How are you planning to scale up while keeping down the cost of screening the people to whom the money goes?
Sure. Any other questions? Yes?
Cornell Jackson, University of Greenwich. I mean, the interest rates you showed for microcredit, the education was very low. How do you ensure that your partners are actually charging that, no extra fees, no compulsory savings?
Mm-hmm. Okay. Yes. Go ahead.
And Alex Roscoe, Care International, follow-up question to that. As the interest rates lower, how are partners covering their own costs, and to what degree is the system subsidized by other institutional funding?
Mm-hmm. Final question, Tom. You had a question?
Yeah, Tom Sanderson, 5 Talents. Could you just talk us through the customer experience and the timeline and what they can expect?
Okay. Final question.
Chirag Shafwani, Morgan Stanley. I'm not sure if you actually went over this earlier, I walked a little late, but could you go over any, I know you've had great success with several of your borrowers. Have you had any situations where it's been unsuccessful, and how has that played out for you guys?
Sure, sure. Okay, great. So the first question was about how do we scale, ensuring that given that low margins we have, how do we scale, and are we going to compromise the model? And so that was the first question. How do we ensure? The second question was, how do we ensure that we have the last mile visibility, that there are no extra charges being paid or levied on the borrowers, the community, and is there any other subsidy which our partners get to actually support them? And then the customer experience. What is the customer experience been like? And that was the fourth question. And then any unsuccessful, we have quite a few, so I'll talk about them as well. Okay, so the way we are looking at, and that's actually the motivation for the topic of my talk, which is to making the internet work for the poor in India. To be honest, it's an audacious attempt to make a a tool like internet to make the economies of scale which internet brings to make it really work. So what we're trying to do there is two things. One, okay, so when we work with the partner gets about 9% APR. Just to give you a spread of interest rates, 15.3% is what the borrower pays, out of which 9% APR is what our partners get to cover their operating costs. 3.5% APR or APY, annualized percentage yield, is what our investors get who come online. Rangde gets about 1.8% APY. And we have about 0.8% APR for defaults, for contingency, in case there are contingency and defaults. So what we're really looking at is to really strengthen these partnerships with our partners. And it's not about, unlike a typical microfinance institution where the conversation is only finance. So I give you the money, I come and take it back with you. So there is no social, there is no social glue, if I can use that word, between them. So what we're trying to do really is work with community leaders, community organizations who have a track record of delivering impact. And all we are saying is, we've done a fantastic job of working with these communities. Here is where we come in. We give you capital, which you can then lend to these communities. So that is a very crucial piece. And we are actually working and getting more and more closer to our partners and saying that let's co-create. It's not about you working with the communities, but let's do it together. And when I say co-creation, we're talking also about getting in some systems and processes in place. And to that extent, what we're doing, so we have, completely, it's an online platform. Our partners access it, their workflows, they get measured on SLAs and timelines and all of that. But apart from that, we're also introducing Six Sigma. So at Rangde itself, we have introduced Six Sigma, not because it's a nice fancy term, but because we feel that that is what will determine our success. So that we get a measure of process efficiencies, so that we can communicate to them and also measure their efficiencies. So that is something which we're trying to do. And so yes, I think it will be critical to build these partnerships and for scale. Yeah, yeah, I'll shorten it. Yeah, so I was trying to see if I can address all of them in one, but yeah. In terms of ensuring that there is, in fact, there are no hidden charges and all of that. Over the years, we've worked with 40 partners, out of which only 18 are active. And the reason why they're active is, many of those reasons were like, they were not able to run the program beyond a point. They didn't have the field staff, and more importantly, they deviated from the mission. They said, okay, we are not going to make that effort to find communities who have never borrowed before, but we'll just go and give it to somebody who already has capital. So I think that's something which we've learned again, but that is something we are very conscious. Our partners are very conscious of it, and they actually sign this. They sign agreements every month saying that we have not violated the mandate. So, and we also visit them. So we do periodic field trips. So we're pretty close by. We visit them unannounced. We talk to the borrowers, and we have built a whole impact office around this whole thing. We even call the borrowers. We are introducing that. We call them randomly and ask them if they're fine, if they're paying anything yet. So building, basically adding more sort of systems to it and tracking it. I guess that's the way we're looking at fixing that issue. In terms of customer experience, it was fantastic. When we started, our first field partner found it challenging because the partner said, I'm doing microfinance, I've got a set interest rate, I can't lower it for a community. And the way we fixed it was to say, can you work with the community and tell them that this is a new microcredit product? And he actually branded it, called it Sankalpa, which means resolve. And when they started doing it, they said, that's a different microcredit program. So don't even compare the interest rates. So those were the initial days, but over the years, what we've done is we've worked with partners who find alignment with our mission, our mandate to reach out to first-time borrowers. And that has worked quite well. And also there are underserved communities across geographies, if you look at a country like as huge as India. And then unsuccessful, yes, I think we've had instances where we had to retire partnerships, where the borrowers were identified, but for all the wrong reasons. There's a disconnect between community and the partner. It did lead to a lot of chaos. But what has happened is it has helped us to strengthen our processes and systems over the years. So now we're looking at sort of scale and looking at building more partnerships and also looking at partnering with the government. World Bank funded initiatives. There's a lot of innovation forums in India right now. We're trying to see if we could participate in those forums and work with the government. I think I've sort of covered most of them. If there's anything.
Well done. Well done. Okay. Thank you very much.
Thank you so much.
That's very, very interesting indeed. And I'm sure there are many more questions which you can raise during refreshment time. And let's move on to the next speaker, which is Martin Hinz. And again, I'm come back to CGAT strategies. One of the strategies for the next 5 years is, again, about understanding the demand to effectively deliver for the poor. And I personally believe that microinsurance, quite frankly, is much, much more important than microcredit. So let's listen to Martin, what he has to say.
Hello, good evening everyone. Thanks a lot to Morgan Stanley, the club, for inviting me and for you being here. How do we go about it? I explained a little bit. I was asked to explain what microinsurance is, so I'll do that. And then, if it's possible, let's work out the agenda of my little talk together so we have a little bit of interactive agenda setting. Okay. Good. So, okay. Here you see the target market that we're looking at. It's about 2.5 billion people living between $1.25 per day and $4 a day. It's it's not put in stone, but a rough estimate. Microinsurance usually same as microfinance, microcredit doesn't touch the very poor. So maybe that's a case for social protection. And then of course we have classic insurance. So we play actually in the largest chunk of the world population. Okay? Now, how do you operationalize this? Because I'm getting asked, how many people do you insure? Is it profitable or not? All those nice questions. You need to know exactly what portfolios are microinsurance and which one are not. Okay, so what Allianz has done is look around in Google. Yeah? Is there any operational microinsurance definition? And guess what? There is none. So at least the most common denominator is it has to be low income. But what is low income? Nobody knows or agrees on. So, okay, we said, see, first principle, it needs to be an insurance product. So it needs to be actuarially fair price. So it's not for charity. It needs to be priced to actually make a profit, or at least break even. It needs to be a developing country and emerging market, but it's an Allianz definition, and we believe only in those markets does the growth story really work. If we grab a microinsurance customer today, we'll be able to grow with him with a high probability over the next years. That's why we have a geographic focus here. And the third one is that the great majority, not everyone, but let's say 80%, needs to come from the bottom 60% of the country that we're talking about. And also we say, well, if government subsidies are more than 50%, basically it's a completely different business model. Then the government is your customer and not the retail customer as such. So we say that's a different kind of business. So that is the way that we screen portfolios and we say what is a microinsurance policy or not. It's still not so easy, everything here, but at least it gives us a clearer picture than just say low income. Okay, here I stop. So I have explained a bit what microinsurance is and how we define it as Allianz. And now I would like to ask you, what are the agenda points you want me to talk about? First, financial literacy. Okay. I was on an island once in far-flung Indonesia. I mean, Indonesia is far-flung, and then an even more far-flung island in Indonesia. Sitting at the beach, talking to farmers and explaining microinsurance and asking about demand. They were saying microinsurance, life insurance, don't you die faster if you have life insurance? So how do you answer? You know? Okay, you can come with statistics saying, no, that's not the case, but the farmer really doesn't buy that so easily. So one of many examples. The other example is, that is a funny thing, insurance. You want me to give money, but if I don't use it, I don't get my money back. Where's the good deal for me? Huh? So financial literacy and awareness how insurance works frequently comes up. Okay? So one of the first steps that we do in this regard is we ask the customers about their understanding and about their needs. And I did exactly that just now. I didn't tell you much about microinsurance. I just gave you pictures so you know more or less what we're talking about, and then I ask you, what do you need? In that sense, what do you need? What do you want from me? And here we will be asking, so what's your literacy level? Can you read and write? What is sort of your most pressing worries? That's what we do. Okay. Then we try to tailor the products according to those needs and sort of levels of skill, right? So let's say in India, we were saying that people are most receptive if they have video with Bollywood dancing in it, okay? So we produce a product, and along with it, we produce a video that can be screened on village screens with a lot of dancing, and so people get entertained and they get the message. So that's what we're trying to do. But each market sort of is also slightly different. I mean, let's say Colombia, we do microinsurance in Colombia or in Malaysia, literacy levels are a lot higher, education levels as well. So maybe you don't go by the Bollywood films, you're already showing some more comics, or you're actually giving them a policy to read. So it really depends. In some countries, we do financial literacy actually as a CSR initiative. Microinsurance for Allianz is not CSR. It's a business with a good intention, so it's good business in a way. But some companies, let's say in Indonesia, they have decided, okay, we want to improve financial literacy anyway, because it's a big need. So we do it for our microinsurance customers, first of all, because the synergies are there. And in other countries, it's more a business kind of approach. So you have different needs, you have different approaches, but basically a lot needs to be done, to summarize that. Okay? So that is about financial literacy. Next point was delivery. Okay. You might know from the UK how insurance is sold. You go to a broker or to an agent and they talk to you and they sit down and they make a risk assessment with you and then they hope you sign. And you know the rule of thumb globally is that 10 customers that an agent talks to, one signs. And then you look at the living costs here and then you calculate the premium and hopefully this agent makes a good living. But the average premium in microinsurance can go from anywhere 1 to 10. I'm confused with pounds, so maybe I use euro there. But let's say 1 to 10 euros per year. If you add some more savings, it gets a bit more expensive. But imagine even 50% commission for an agent doesn't make sense. So there's nobody really going around knocking doors. So what we do is, obviously, we work with partners. And most of the partners that we have, it's about 450 worldwide. Most of them are banks, which is about 150 partners, and 250 MFIs. So we reach the customer not directly, we always go through partners. And very often those partners already have financial literacy initiatives anyway, and then we just squeeze in an insurance chapter. That's also sometimes done. So basically you need a big aggregator, otherwise the numbers for Allianz would not work. And then this aggregator would get maybe a commission of, let's say, 10–20%, but that multiplied by 100,000 or 200,000 contracts makes good sense for everyone. Okay? So delivery usually is through partners. We are trying some initiatives on mobile insurance. So selling through the mobile, but our experience is no, you need to have a sales talk first. You need to see a face. Let's say we tried that in Africa, and just by sending an SMS to somebody who doesn't know what insurance is, hey, click OK, and then we deduct your mobile wallet, that doesn't work. You can use that for collection later on. So basically it's still working through partners, personal talk. If possible, we invite, we work with CARE actually in India, and they were very good at this financial literacy. We had the movies, but they had also street plays and dance and puppet, whatever. Very impressive. And then to do that cost effectively, we invite, let's say, I was at a meeting, 800 women in a big tent after work, say in the evening, and then you give your message. So you try to aggregate wherever you can, both financial literacy as well as delivery. Okay, good. What's next on the list? That was a little bit about the technicalities and operations and products. Okay, most of the products are life insurance products, very simple, and very often tied to credits. So you take the credit from your partner organizations, along with it, obligatory, comes a credit life insurance. If you happen to die, God behold, that's what we have to do in Indonesia, to say, nobody wishes for that, please explain me saying and mentioning the word of bad fortune happening to us. Anyway, if that happens, Allianz will pay the loan off, so your family will not be burdened with the debt. They're already burdened enough with that not burdened with the debt. They're already burdened with the debt. So that's credit life. And most of our products, say 80%, I think, are just that type of product. Then we have some sort of accident products, which I personally don't like so much, because they have very little customer value. Very little non-life insurance, which would be, livestock, homes, fire insurance, and a little bit of agricultural insurance, and almost no health insurance. I tell you, if you tell me how to make that profitable, I'll give you also my personal Nobel Peace Prize. Okay, so that is the product. And I've already touched upon it a little bit, that I don't believe that these are the products that the customer needs most in many cases. Highest demand across the world is health insurance, and I think everybody can understand why that is the case. And also a lot of education savings. That is what people wanted. Or if something happens to me, then the insurance, the education of my child is insured. Unfortunately, these tend to be the most complex products. So, as an insurer, being this a new market segment, we touch a bit about innovation, you don't want to start with the most complicated things. So, that is about products, but it doesn't really fit demand 100% yet. Okay? So that's about products, about processes and scalability, right? Okay, well, I mentioned that we achieve scalability by working through partners. And then naturally we look for the biggest ones. In Malaysia, we work with the Malaysia Post. Post is usually a good candidate for scale. We try to work with mobile companies. Sales doesn't work so well, I mentioned that, but for collection it's excellent to collect through mobile money. We also try to go sort of with good partners. So we have a due diligence process where we look at, I rather prefer a small fish which looks nice, has nice colors and knows how to swim, than a big giant that is sort of swaying. So by tendency, yes, big fish, but then they also have to bring a certain quality in terms of processes. Also attitude and values to the table, so that we work with them. That's what we do about scalability. What we also try to do on scalability is not so much only to reach as many people as possible, but also to upsell. So once we have a customer, it's very crucial to grow with this customer. One of the questions that were not asked, but I will tell you anyway, is why Allianz is actually doing that, and where's the biggest promise to us in microinsurance. So for microfinance, I think it's pretty well established. You can make money on that. The margins can be very, maybe too healthy. So it's good. You can be a microfinance institution forever. And then there's even people, well, don't do mission drift and don't go higher up market. Please stay in your sort of low income segment. Otherwise, the donor money or whatever will run out. So this is where you stay. For microinsurance, we have learned it is profitable, but very tiny so. And to a company like Allianz, these profits really don't matter. The only thing that matters is that it breaks even, so we know it's run efficiently. Where the promise for us is we have to upsell. We have to tell those people, okay, now you bought this credit life policy 3 times, 4 times. How about on your next credit application, there's a little tick box which says I also want to insure my spouse. Voluntarily. Let's start with this. And imagine you have done this twice, and we find out that you have done that twice. Then we say, oh, maybe this person appreciates insurance. So maybe we give this person a call for telemarketing. Because the probability of having a closing is quite high then. And once he has paid his sort of telemarketing policy, which is already a bit more upmarket, we might make an agent appointment with him. This is what I'm talking about. So scale for me has two dimensions. It's broad, but it's also upselling. And the upselling part is I think, what is overlooked so far. Very much so in the debate. Okay? So, in terms of claims, somebody was asking, how do you handle claims? Sometimes we just outsource and delegate that to the partners. Let's say your MFI partners. If there's a claim and the claim is only $50, please pay. I mean, we train you a little bit to distinguish a dead person from a living person. And once you can do that, you can pay a claim, at least on life insurance policies. It's faster, and it saves us the costs of employing a highly paid underwriter, claim underwriter, or doing some investigations. So that is one way of doing that about the claims. Okay, so what is innovative? I think that was the last point that was mentioned for the agenda. Okay. Well, microinsurance is both a new market segment for insurers, and as I alluded to in the financial literacy piece at the beginning, you need to customize products. So you cannot just take a product that worked well in the UK motor market to India, reduce the premium by 90% and sell. It doesn't work. It doesn't create customer value, and it gives you as the insurer also a headache because people lapse and then they have reputation issues and all that. So you have a new market and you have new products. Usually that's not the kind of constellations that the businesses would like. But we see the potential, as I alluded to. There's still many, many people that are not covered by insurance. I think the latest estimate is of those 2.6 billion people, about 500 million are touched by any sort of insurance. And then let it be credit life. So you cannot tell me that this is the end of the story. I mean, you're underinsured still. Okay? So we see the potential. We also see the potential of building a brand quite easily now. So this is why we venture into that. But here's the innovation as such, as a market segment. It's new and the products are also new. And then when you go down to processes, if you look at the processes in microinsurance, there's many sort of small scale innovations, like outsourcing claims to the MFIs. That is an innovation that hasn't been done somewhere else. Okay? Or, I mean, in Indonesia, we had a policy and it had no exclusions, apart from age. We said, should we exclude suicide? Who is checking? Nobody. So let's just don't do it, because if you include suicide, technically you would be obliged to tell people about it, which adds to your cost of educating people about the product. And then nobody likes talking about suicide. So just exclude it. That's what we did. Then we found out suicide must be included because it's not Sharia compliant with Islamic law. So when we did a Sharia microinsurance policy, or takaful as it's technically called, we had to put it back in. Okay, that's what we did. Okay. I think another innovation is also what I mentioned, that, well, you give people the product, but you also give them financial literacy training at the same time. So you give them added services, which I think from a customer perspective is quite a nice thing to do. Yep. I mean, now maybe we come to the real Q&A. I'm not sure about time.
Well, let me pose two questions. I think you have covered 17 million customers. Now, in the World Bank definition, we talk about extreme poor being those which has got income of less than $1.25 per day, per person, which is our parity. And between $1.25 to $2.50 is the poor. And above that, we can call it a low income. So how many of the 17 million you have within that category of $1.25 to $2.50?
That is the first question.
First question.
Okay. Well, I would love to know too, but I don't.
Okay. So,
Well, but there's more to it. Look at this, right? We want 80% to be in the 60% poorest. Why is it actually not 100%? It's very easy, because if you lend or if you insure, for example, a portfolio of a microfinance institution, you will find that they actually do sometimes have quite big credits. It's not many, but they are there. And do you want to exclude them? It's operationally a nightmare to say which ones are now really too big and which are small. So we just say as long as we can guarantee most of it is low income and we think that's 80%, then it's good. Also another point is those big ticket customers are still important for profitability. So we like to keep them in. So overall the story makes profit. But we had this check by KPMG. So we asked KPMG and say, okay, we want to be the first company to ever get external data assurance on their claims, how much they insure. Because you see many competitors, I mean, everybody is sort of looking into that, and you see we insure 3 million people here and 2 million people there. But how is it actually defined, and has anyone looked at it? What kind of product is it? It gets a bit opaque at the moment. We said, okay, one of our key values that we have is transparency, so we want somebody else to check it. And KPMG was nagging on this point for about 2 or 3 or 4 days, and I mean of effective working time of their highly paid consultants. And they asked, please prove that to us, that Allianz is really insuring low-income people, and it was difficult. So obviously, we don't collect on any kind of paper, please give your income range. So we don't know. So sometimes we go by, let's say, proxies. In India, we know the distribution partners, and the distribution partners sometimes have a very specific focus, so we use that as a proxy. Another proxy that we use is loan size, because often we insure loans, and if the loans are $50 or $100, which I think is about 20 to 30% of what we're doing, then it's definitely very low income. But I don't have a precise answer. You would be surprised how little we know about our customers. Very little.
that's okay.
Next question.
You covered 17 million. I think the word financial literacy, I think is being used not only for microfinance and microinsurance, even in the banking world. Quite frankly, if you ask how many of you know what is the effective rate of interest which you pay on credit cards, you'll be shocked. We tested this on the credit cards several times, Phyllis could vouch for it, and not many professional people even knew what interest rate they're paying. So financial literacy applies everywhere. The thing which I have come across is, it says micro insurance is never bought, it's always sold. Would you say that this is the case in your micro insurance clientele? It's always sold, it's never bought. In other words, they don't come to you, I want micro insurance, but somehow that you sell it to them.
Okay, I would say it's 90% sold and 10% bought.
Okay, good. So 10% 7 million, very good. Okay, one more question before we say refreshment time? Yeah, we can squeeze in 2 guys, there are only 2 left. Oh, sorry, there are 2 there, 2 here. Okay, go ahead.
You said that you actually don't know much about your clientele, but still within the data you have, I'm curious to know if you've seen any trends in the kind of people who bought the life insurance, for example, single mothers or senior people rather than younger people. It would be great to know anything.
Well, I can tell you it's most of them is women.
Okay.
That owes to our distribution model through MFIs, which tend to lend more to women.
Quick questions, question answers, just go ahead.
My name is Prabhat Hussain, student Microfinance. Basically, I have 3 questions, but given the lack of time, I'll just ask one. On the subsidies, I read you're saying no government subsidies more than 50%, so there are government subsidies lower than 50% possibly. At the same time, you're saying that insurance not for the what you classify as the poorest of the poor. So the question is really, I know you're trying to do this as a profitable venture, but what happens, or what products are there for those 1.2 or whatever the number of people? Is there no insurance product for them?
Oh, yes, they are. And if they are profitable to us, we would also do it, but we wouldn't call it microinsurance. if it's subsidized, and most of the time it is. One example is the RSBY health scheme rolled out in India, right, where you pay 30 rupees, which is definitely less than £1 registration fee, and then your health insurance covered for a year, I think, right? And this, in India, is the rest of the premium is picked up by the government, and they usually make tenders per region, and insurance companies are free to apply for those tenders, and sometimes there's very heavy competition for that. So it is insurance, and it's subsidized, but I'm just saying we don't call it microinsurance, in the sense that the business model is completely different. It's more akin to social protection. The state is just using the vehicle of insurers to get social protection to people. So that's why. Yes, there are products, but usually they're subsidized, and then the business model changes, and this is why we don't count them into the 17.1 million people. Through Allianz Re, we are participating in insuring 125 million farmers in China and in India. But we don't count them to our list.
Good.
Okay.
One final question on this side. Go ahead, please. Go ahead.
Right. Well, this is way from investment learning. I observe that we have very good combination here in Japan. You are from microinsurance. We have them from peer-to-peer lending on website. Are you working with peer-to-peer lending website at the moment as a delivery partner? Or what's your perspectives on the role of technology in the long-term development of microinsurance?
Are you talking to
Okay, no, we are not working with peer-to-peer. It's also difficult because you are also not directly lending to the customer. So that would be actually a B2B business kind of thing, which we are happy to do. But on this microinsurance thing, we don't, because the structure doesn't allow for it. I just know that some of our partners receive funding from KIFA. So indirectly, yes, we are working with that. Technology, well, this mobile money thing is my biggest promise. Not for sales, but for collection and claim payment, and knowing more about your data, your customer than before, right? Maybe single mothers have a different premium collection mechanism or payment through their mobile phones than others. Maybe we'll find out one day. Thank you.
You mentioned that the health insurance is not profitable right now for microinsurance. Are you doing any research on what the obstacles are? Because you say that the demand is great. If you got that right, you could make a lot of money. So what's the obstacles and what research you've done to solve them, get over those obstacles?
Okay, research on health insurance, I mean, Google it. Micro health insurance. Papers, I think you'll find at least 50, which are good, and then there's plenty more that are not so good. So, what are the obstacles coming out of these papers? Basically, it boils down to transaction costs, high premiums compared to other microinsurance products, because health is a frequent event, and lots of issues about anti-selection and moral hazard, so people selecting against you. And then financial literacy on health insurance is quite tough. Because in health insurance, you cannot do it like we did on life insurance in Indonesia, just have no exclusions. Then even you wouldn't be able to pay. So the longer the things get that you need to explain for everybody, it makes it more tricky. So you have a couple of issues, right? And then you have also fraud. I mean, let's be open. You have more stakeholders. You have the hospitals, you have potentially pharmacies, you have the doctors within the hospitals who often work on a more or less private basis. So they have an interest to prescribe more expensive drugs. They don't like generics. So there's lots of individual challenges here, right? And then is Allianz doing itself any particular research into health? We have other issues to research and solve along the way before we get there. So one step at a time.
So I'm Phyllis Santamaria from Microfinance Without Borders. So what are the other priorities that you're going to be tackling before you do health insurance?
Okay, my first priority is upselling. I need to prove to my CEO that today's microinsurance customers will deliver value to Allianz over the long term and how much. Because once we have that answered, it makes a credible investment case and business case, and it puts microinsurance higher on the agenda.
Okay. My name is Anand Kumar, and my question is to Ramakrishna. See, in India, you know that the online implementation is different in different areas. For example, you come from, I don't know, from South or Delhi, it is quite as compared to, so for example, Eastern states, they're more well organized. So you also try to do something for those states like Bihar, Uttar Pradesh, West Bengal, Madhya Pradesh. And if you do, then what kind of challenge? Implementation is very, very less. It's a very good model, you are doing very well, but how you tackle these challenges for this kind of states?
Okay, so all our partners, even though it looks, because the platform is accessed by our field partners, one of the prerequisites is that they have the access to internet. And the good news is that it's sort of the telecom footprint is actually spreading quite fast. And we've actually purpose-built the platform. It actually needs a very small internet footprint, bandwidth footprint, and they can actually run it through a data card.
Sorry to interrupt.
Sure.
Can I ask a question? What is the percentage of your business of, say, southern states, northern states, vis-a-vis these states?
Okay, so we are quite heavily focused in Maharashtra, Madhya Pradesh, Orissa, West Bengal. So these are high focus states where we are largely focused because of the lower access to capital, predominantly if you look at the microcredit scene in India. And most of the partners, we did have this, I know where you're coming from. So we did have this initial challenge where they came up with all sorts of excuses saying that, oh no, we can't do this, we can't take a digital picture of borrower, it's too complicated. But yes, I think there were a lot of these mental blocks, but over a period of time, they were able to get over the digital divide. So not a real challenge, because ultimately the last mile is where it happens offline. So they collect the data, they follow the KYC norms of the RBI, they get the data, and then it's uploaded onto the website.
Sorry, my name's Scott. I'm from Microfinance headquarters. I was just wondering that you said, do you pay an interest rate to the lender?
Yeah.
I understand that Kiva don't do that, do they? Nor do Lend with Care or quite a lot of the other worldwide ones. So that's why you've done why you're chosen to do that. And given you're trying to get your interest rates down so low for the borrower, by essentially would have passed on that 3.8%.
Right. So when we started, we did a lot of these sort of snap surveys, and we keep doing these polls, and they're quite interesting results we get from these polls. For some reason, and this is sort of perhaps an Indian psyche, where they feel that if they don't get any return, then they would treat this as a donation, even though they get a good chance of getting the principal back. So this might change as the sample size grows, but then, so for the very simple reason, and also why 3.5%? The reason why we did that was when we started, when we launched Runday, at that time, the savings bank rate in India was 3.5%. It's no longer 3.5%, it's now deregulated, but that's what we wanted to match up to.
Just a quick one in terms of the different rates that you have for the different products. Is there a rationale in terms of the investors requiring, so investors investing in education, for instance, if I were to get money, I would require a lesser rate, or because you're the ones who are driving the rate, so what's the scientific rationale?
Yeah, again, I think it's a very Indian thing where, Indians across the spectrum, they value education a lot. And that sort of gets extended even when it comes to, philanthropy as well. Education loans are loans get funded, they get funded in a record time on Runway. So we have noticed this across, it doesn't really matter which state the borrower applications come from. There are a lot of social investors actually subscribe to updates for education loans, and they get funded in a few days. So
you mentioned you need to report to your CEO the value of microinsurance and to request continuous investment in it. How did you do that? How did you persuade your CEOs to invest in microinsurance? This is the first question. And
There's this super CEO of Allianz Group in our case, which sits in Munich, and he looks at a portfolio of or revenue of over 100 billion euro a year. Okay. Then there's sort of the second-class CEOs, which are still first class in quality. Let's say, let's say in Indonesia, right, or in Colombia. Now their portfolios are much smaller, and they're much closer to the market. So to those CEOs on the local level, you don't need to do much convincing. They see the growth happening at their doorstep. And they also see that if they can suddenly say we have 50% more customers than last year, because these are the rates that we sometimes see, the press will receive it well. They believe that eventually some of those people will grow with us. So I don't need to do much convincing on the local level. I need to do convincing on the big level. Also because there's an additional point here, and that is reputation risks. Because as good as the story sounds, you know, as soon as you have suicide somewhere, you know the story for microcredit, things can go awfully wrong. And then if you match it against the premium, last year we made about 80 million euro of premium for microinsurance. It's nothing to the big Allianz Group. Yeah? So both, you need to demonstrate that there is growth potential. And you need to say also that we have risks under control. Okay, and the growth potential you basically demonstrate by success cases. You need to say, we had a portfolio of 100,000 Range customers. Let's put it this way. We made a voluntary offer, and then 10% took it, 5% took it again, and then we converted about 2 to a telemarketing product, and 1% eventually after 5 years went to an agent. Now if you get the net present value of those cash flows and you do a bit of extrapolation, you get the lifetime value of a micro customer, and this is what I need to present. But I don't know it yet, don't ask. We're still working on it. There was another question. I think, how do we improve the product, right? Very easy. You go to our website, you Google Allianz Microinsurance product pool. You'll see all our 20 products, and we do an own rating of it. Which ones are good, which ones are not so good. We have additional criteria. These are just defining, but they don't tell you about the quality. We have another set of criteria which are outspelled there on the quality. And once we have identified it, we say, okay, this product is not so good, try to improve it.
Excuse me, you just told that the super CEO is getting Allianz $100 million.
Euro, not profit. No, that would be nice. It's revenue.
So out of that 100 billion euro revenue, what is the percentage of contribution what you are doing for 17 million customers here?
Well, I said it's 18 million euro of microinsurance revenues last year compared to 100 billion. So it's less than 1 per million.
Less than?
1 per million. Yes. Because 1 per million is 100 million euro and you are 80, so it's 0.8 per million.
It's profitable.
In most cases, yes. Yes. The funny thing about profits is well-run companies which are profitable overall, have good managers and good structures, they also make profit on microinsurance. If you come to companies that are sort of a bit more shaky and that run more losses or less profitable, you see the same thing on microinsurance. So for me, it's not a question about microinsurance, can it be profitable or not, it's more a general management kind of question. Yes, please.
I'm Christian Peterson from bottom of Pyramid Asia. You confuse me a little bit with Allianz because I find it difficult to see the social impact statement in what you're saying. So if I read it right, it sounds to be is a segmentation policy, a segmentation strategy right here. You're acquiring potentially future customers to other products using the microinsurance label. So it's more about a segmentation strategy in the customer acquisition model rather than doing the social business.
Okay, I love your question. Thanks a lot.
Is it right?
Let's put it this way. Okay, we want to grow with the customer, right? So we want the customer to get to know Allianz in a positive way today, so he'll remember us positively once he has a bit more money in his pocket. Now, how do you make the customer happy today? No, basically you need to give the customer the products that he needs. You need to do good on service, you good on claims, you need to treat him fairly. Short-term profitability will not do the trick. I mean, it doesn't matter if you have 10 or 20% today. It doesn't really make a difference to Allianz. So by this business regimen of having to grow with the customer, you're obliged to deliver good value. That's how I argue. So what we don't do, you're right in this, we don't do micro health insurance now. We know that would be what people know most, but then we know we would not be able to grow much with this customer because we have so many issues to handle now. So yes, it has a social benefit. It comes from the business rationale. It's synergetic. It's not either or. I hope I passed a little bit your hurdle.
The small hurdle that you have is that you have a business-to-business business model, yeah, B2B. Your branding is running through the various different MFIs, the local banks, the post, things like that. The customer is going to remember the branding. The customer is going to remember the contact point from the B2C supplier. Yeah. Your branding is behind the scenes. How many of us Western financial literate customers know that we are insured with Allianz when in actual fact we went to our financial advisor who sold us, well, it could have been anything, probably was anything. So that's the first point. The second point is, if you're a B2B provider, you don't officially own the customer because the MFI owns the customer. So how are you going to be able to upsell in due course and convert that customer to a highly profitable retail customer from a micro customer?
How do you do B2C branding if you're in a B2B environment? That's how I paraphrase that. Okay, we encourage our distribution partners to expose, let's say, the Allianz brand to their customers. We don't like to do white labeling, as you say that. One very simple measure is on your credit application form, even if it's compulsory insurance, please name your beneficiary, which is also good for financial literacy because they have to make some sort of choice, which they ask about. Why do I have to nominate a beneficiary? What is that for? And we put the Allianz logo. Another way to do that is through the financial literacy, which we run, for instance, in Indonesia as a CSR initiative for our partners and for their customers. So from this angle, then they get exposure to the Allianz brand. But it's really crucial if we don't make it known to people that we are Allianz and we do good things for you, it will not work. You go again to Google and you Google for microinsurance claim stories, Allianz. You'll find a series of 9 videos. Go to the one that is from Indonesia, where a guy is talking. He's basically asked a couple of questions. He has received the claim payout, by the way, so he is a real beneficiary of microinsurance. And he's asked, so what do you know about insurance? And he says, well, I've heard the word. So this guy has already received money and he has heard the word. And then, do you know Allianz? And he's saying, no, never heard. Then he's asked, well, do you know that your insurance was waived from the loan from this partner that we're working with? Oh, yeah, the partner, I know. You look at that, it's exactly showing what you are saying, so it's true. That is a big challenge for us. Next one is we don't own the customer. Okay, in the upselling strategy that I explained a little bit, okay, you would basically start with voluntary tick box insurance where you tick the box and then the partner would get additional commission for that, so partner's happy. Then you would say, okay, partner, now as an MFI, you cannot go all the way now to go to wealth management with us because you're stuck here. What we will do, we will pay you a referral fee for every customer that switches over to telemarketing. But from that moment on, we own the customer. Are you happy with that? And then you negotiate and there you go. I'm not sure if it works, because I said it's in the making.
Can you disclose what kind of fee that would be for an MFI?
No.
Whenever I call for insurance, they ask me things like, what color is your car? Do you have garage? Do you have doors in your garage? Or what area are you in? You said earlier that you don't know much about your customer. How do you go about controlling that, like customization issues, especially because I would imagine someone who's 70 would have higher premiums for life insurance than someone who's 20.
Okay.
And how do you verify such things because in these developing nations they don't have good documentation?
Okay, it comes back to the, we tackle it through innovation. That's the shortest possible answer, and it goes to the point on the agenda. Let's say individual health insurance or life insurance in the UK, yes, you go to your table, you're a male, you're 35, you have to pay this rate. You can't do this exercise with the 17.1 million people. So what you do is, you look at Ranga, maybe you have 24,000 customers now, or 28,000. So you say, what is the average age? Maybe 40, 45, something in that range. 35, even better. Okay, then we give you a good rate for about approximately 35. We give a little bit of loading, because we don't ask many health questions. Are you currently sick or pregnant with abnormal conditions? We wait for all that. We rather price in a slightly more higher premium, and there you go.
So again, you're constantly talking about having good value for the customer, and touching on the point that came up earlier about customer satisfaction. So how do you actually assess it? Because a little bit of a worry is that with what you talked about with financial literacy, does the customer really know what they should be getting in the policy? And that's maybe a bias in the way that you assess good value.
I need to reiterate that, at least for Allianz, microinsurance is a learning journey, and we have definitely not come to the end of that journey. So there's lots of things I would love to do, and for example, microhealth, and I don't know how. And another thing is that we don't ask many of our customers on their satisfaction level. Now, there's easy things you can do. You just look at their repurchasing rate. So if you have a voluntary product, how many purchase it again? It's a very good indicator of what people actually think about your product. Now, most of our products are still mandatory attached to credit, so you can't do that. Okay? But once we get more in the voluntary space, that's quite easy to do. And then, of course, you can do surveys. Now, I was talking about those claim videos from last year, and if you watch all of them, well, it's 3 minutes per video, you will notice that there's really an issue on financial literacy there. Those people, they are happy once they get the payout from the insurance, like this guy in Indonesia I was talking about, but he didn't expect it. It's money fallen from the sky. Suddenly. So forget about adapting your risk management strategies because you have insurance, microinsurance. I think that is not the case in 99% of the cases, not yet. Okay? So what we learned from that is, okay, if the beneficiaries don't know about insurance, next thing we ask our customers. So about September, watch out, we will publish some videos where we're actually asking a market research company for the first time ever to do a quantitative survey on customer satisfaction and video documented again, randomly selected. So in September I will know more.
My name's Scott, I'm from Microfinance Without Borders.
My name's Charlotte Watts. I actually work for HSBC, but I'm here independently.
Excellent. So Charlotte, is this your first time at the UK Microfinance Club?
No, this is about my third time here, actually. I've probably come, I think it's 2 times before.
Yeah, sure. And do you enjoy it?
I really enjoy it, actually. I think I wasn't quite sure what to expect, because actually I just came after seeing the website initially, and I had an interest in microfinance. This is previous to doing a course with Microfinance Without Borders that I've done for this and what I really enjoy about it is the broad variety of speakers that there are, actually, because every time I've come there's a completely different topic covered, and that means that there's lots of different experts here talking about different things. So actually the range of things that you get to hear about is quite
And so tonight we were hearing about microinsurance specifically.
Yes.
Did you learn anything about microinsurance today?
I learned loads about microinsurance and quite a lot about Allianz as well, I think. Certainly from my point of view, I'm actually a financial advisor in the UK, so one of my parts of my role is to sell insurance to individuals here. So to hear about how that's working in developing countries in a micro environment was very, very interesting for me. See how it's being rolled out, to also hear the questions that were asked by our professionals.
I always find it very interesting how the traditional insurance underwriters have to adapt their products so much to fit into the microinsurance market. Do you see microinsurance as sustainable in its current model?
I mean, given what I've heard tonight, potentially, I think it sounds like it's right at the beginning of its journey. But I think from what we heard, it's quite clear that the incentive for the insurers is not so much the micro-insurance market per se, it's more that they will get access to the kinds of customers that are going to be growing, and therefore they will get a share of the market as those people develop and those markets develop. So I think it reminded me a bit of what Barclays are doing in Africa. You know, and they're making accounts available to poor communities in hope that obviously when as Africa develops, or parts of Africa develops, they will have a foothold in that marketplace. It seems that a lot of insurance companies in life insurance might be doing the same thing. So obviously they're developing markets in hope that as these countries grow, then obviously they'll be inevitably have those kinds of environments.
Sure. And so what advice would you give Allianz going forward?
Oh goodness. I think obviously they. Actually, I'm going to speak to the speaker about this because actually he didn't quite address this, but I think one of my main concerns for them is quality control. Although their product seems to be quite simple, if it's life insurance, there's not much that can go wrong with that because essentially if somebody dies, they pay us. Then it's not like health insurance, which can be complicated with exclusions, and that's where you can get customer dissatisfaction potentially. I think even so, with any kind of insurance, you have to be careful about quality. You have to be careful about how it's being sold. At the moment, they're distributing through MFIs, which they won't be necessarily personal finance professionals. They might be good at credit lending, but that's very different to selling products like insurance. So I think there's room for mis-selling, and we've seen that in much more developed markets, like UK for example, where you have people who are used to doing one thing and selling these things. If they're incentivised especially, things can potentially go wrong. So that's where I'd urge them to be careful.
That's really good advice. And you mentioned distribution channels. There's a company, I forget the name of it, and I won't mention it because I get it wrong, but they are selling, using the channel of mobile phone operators. So, especially in Kenya and Africa, especially in Africa where mobile monies are quite more developed, instead of going through the MFIs. Would you think that might be a good approach for Allianz? Because Allianz, they spoke a lot about how the traditional model of going through the banks and MFIs means that the mobile money is used to collect payments rather than give it out.
I think it's difficult to use mobile technology for sales because, as Sandru quite rightly said, insurance is generally sold rather than bought. So you have to have a very strong message, or indeed messenger, in order for people to buy it. So it sounds as though part of what Allianz is doing is working through MFIs to have compulsory insurance. And for non-compulsory insurance, they will have people kind of selling that. They may be incentivised for it. If you're just sending text messages, which unless you have smartphones, the only format by which you'll be able to try and sell, I don't think that would provide a strong enough message for people to want to buy something like insurance which you can't see or touch or feel.
And I guess the whole financial literacy thing comes in there as well. If you get a text message asking to pay money that you might not ever see again, it's quite difficult, whereas the bank can have
Exactly. And that's why in developed markets there are people like me who take time to explain these concepts, because actually even to people who are financially literate, insurance is not the most straightforward financial products. So to try and deliver a message over text is tricky.
But one final question, it's okay. So one of the things I found interesting in that presentation is the seemingly current lack of social impact measurement that Allianz is doing. When you look at lots of, especially microcredit and even more micro savings, social impact assessment is becoming a huge part of how we actually assess the impact of micro, and even from a profit side as well as a social side. Do you think that that's something that microinsurance needs to take on, or is it just the difference in the model and the way it's sold through business and business alone?
I think it's difficult. I think it really depends on the aim, the fundamental aim of the company that's providing insurance. So with Allianz, their whole proposition is about profit, and the main reason that I gathered from this talk is that they're doing this is to get a foothold in these economies. It's not for social purposes. Although what they're doing is essentially a good thing, they're providing people who would not have access to these products with a product which hopefully will benefit them. I don't need to claim that's better. But I don't know, I think it's difficult to ask businesses to do something more for social reasons than for business reasons. I think if you can ask them to help give their data, if they've got it, to organisations that can do something with it, that might be a way forward. But I think it's difficult to get an organisation that does one function, which is to do it totally from a social point of view.
Excellent, thanks very much.
Good evening, my name is Ola. I'm the president of Westminster University Microfinance Society.
Right, and your name, please?
Well, my name is Ram. I'm from Rande. I'm the co-founder and CEO of Rande.
Right. So Ola, you were here tonight for the presentation, so would you like to ask some questions?
Microfinance in India, do you think the same kind of model could be replicated in Africa?
Well, absolutely. I think what needs to be done is we need to really be on the ground. So if we can build a great, competency on the ground, have systems and processes, and back it up with a great pool of talent, I think we can do wonders.
Also, even though you said that most of your participants that get microfinance are females, do you think that microfinance now should be looking more towards youth as opposed to discriminating between male and female? Because I think also the men have the young males have realised that the women have little advantage of getting some kind of capital, but then they're not under most mainstream microfinance.
Right. So I think this was largely very well established by Mohammed Yunus in Bangladesh, and so do we. We follow this model.
To the T.
Largely because even if the men in the family and young men in the family need money, it is the request is rooted through the women in the family. Largely because the model works on the simple premise that the women in the group, they guarantee the loans for each other. And that's what is social collateral. So it works very beautifully, especially in the Indian context, because there is a lot of peer pressure, and also they don't tend to sort of misuse the capital for other purposes, which men typically are known for.
At the moment in India, you offer these women and you educate them, but to what level? Is it for them to establish their own independent businesses, or is it to still have an indirect dependency on you by still knowing that they can get money and they continually grow?
Yeah, I think it's a mix of both. We have funded about 250 different business activities. It's really small, right from bird cage making to renting construction equipment or wiring motors. So they get as diverse as they can be. What we really do is that so the capital which they get is largely for income generating. That's a standard criteria. But within that, we look at there are two different ways. One, they start a new business. And they're typically new lines of business. So if they were already doing cattle, they have rearing cattle, now they're rearing goats with this loan. So there's a new line of business. Or in some cases, as in the presentation, you saw they also use it as working capital. So they didn't have access to working capital, therefore the margins were affected, therefore the profits were affected. Now that they have this capital, they get more profits.
Also the value chain. That's a thing that I'm very interested in that trying to get these rural or semi-urban people to a level that they're developing a value chain that not only nationally but even internationally that they're goods. So even when people see them on Kiva and they realise that those particular goods in inverted commas are made by people under the mantle of microfinance. Is that something?
Yeah, I think that's the holy grail. Really, because I think if we can connect the urban consumer with these products, that will be like the ultimate sort of value proposition. But we're nowhere close to that. I think. Because the supply chains are still a bit broken. But what they do get is the confidence. Especially, most of our borrowers are first-time borrowers. They get that confidence that somebody is willing to trust them with that, $100 loan. So it's a first step towards confidence building, and which leads to aspirations, because aspirations are tough given the economic conditions. So,
but the mentoring, how long does the mentoring last with them? Is it a continuous process, or once you've gone through your first kind of circle of money, you're kind of on your own? Or do they still continuously get mentored for?
Well, I think it varies from partner to partner, given that we work with partners who have a strong community connect. So they do have their own programs, but there is no specific sort of very focused mentoring program, which we're just now doing. We're doing randomized studies across 3 states for 3 years, but that is something which you're conscious of. But that will be the next level of sort of engagement with the community.
Finance, have you ever thought of asking, I mean, I've looked at it in Africa, I don't know in India, looking like either the multinationals or the big companies looking at their CSI and asking them to donate back to individual microfinance or basically offer you some of their percentage that they could to kind of grow your growth.
Yeah, in fact, we were funded by ICICI Foundation, which is one of the largest, which is the largest private bank in India. So they came in a big way, thanks to Dr. Nachiket Moore, who was the president at that time, who supported us. But I think increasingly we are seeing that the corporates are more interested because they get more returns in terms of social value, because this is not the charity. The money goes to a micro entrepreneur and they get that money back and they can actually track it online. So there's a lot of visibility, a lot of transparency, and they also get to see impact stories. Now we don't get stories from everybody, but we do create a sample, audit them, and then we publish those stories back. So.
But within the last question, in the next 5 years, where do you see your organization?
Right, so we are looking at, in the next 2 years, that's what we are focusing at the moment.
Yes.
So in the next 2 years, we're looking at increasing our social investor base 10 times. So 2015, end of 2015, we're looking at having about 50,000 social investors. And we aim to do this by looking at multiple strategies. And in terms of the borrower outreach, we're looking at about 60,000 micro entrepreneurs who would have impacted.
Thank you very much.
Thank you both very much. That's really good. Thank you.
Hi, I'm Scott from Microfinance Without Borders.
I'm Hugh, consultant and author.
So Hugh, have you been involved with microfinance in the past?
Yeah, I've been working in the sector for about 12 years now, mainly in Latin America and Africa.
Yeah, and what kind of work do you do in microfinance? What have you?
I work mainly with a number of microfinance networks and funds. I'm a consultant, so I do a lot of turnarounds, a lot of advisory work to investors in microfinance. I've done restructurings, I've done a huge range of microfinance field work, mainly based in the field.
Excellent. So is this your first time at the UK Microfinance Club?
It is, yes. I'm not usually in England.
And how did you find today's event?
Yeah, I thought it was very interesting. It's good to see that we're finally developing some sort of innovation in the sector after so long. So it was encouraging to see microinsurance in particular. I thought that was very interesting.
So within the microinsurance, what would you describe as being innovative in what was said today?
Well, I think one of the problems is that certainly in the academic world, people are beginning to realise that microcredit and to a lesser extent microsavings hasn't really had much impact on poverty over the last 30 years. So it's nice to see that microinsurance, which actually provides people an ability to smoothen their income and to get some sort of protection from the shocks that actually lead them into greater poverty, that people are finally addressing. So I think that microinsurance is probably one of the more important movements of recent years.
Sure. There's been some sort of debate around whether Allianz, as a big traditional insurer going into the area, developing microinsurance. And the other model that's kind of at the moment is MFIs, who have been traditionally involved with microcredit and microsavings going into microinsurance. Do you have any advice on which you would think is the better option?
Yeah, I think with life insurance in particular, because it's so simple to work out if someone's dead or alive, as opposed to health insurance, which is obviously more subtle. I don't quite understand why microfinance institutions wouldn't first consider self-insurance. So, they have a portfolio of clients, they can work out the probabilities of the number of clients that are likely to die in a certain period, why the microfinance institution would get someone like Allianz to come in and take the profit from the microfinance institution rather than either keep it in the institution or pass it on to the clients by lower premium charges. I don't quite understand. But I think certainly with more complex forms of insurance, then you would need the expertise of a big company like Allianz. But yeah, it's slightly questionable.
You mentioned beforehand that microcredit and to an extent microsavings have academically been written a lot about, but there's not much evidence to suggest they've moved from poverty.
Yeah.
One of the criticisms made of Allianz's current model is there's no real social impact measurement going on. And would you like to see that brought into place?
Yeah, I don't know. Do you mean that their mission has not got a social motivation, it's mainly a profit motivated?
More so that there's no measurement whatsoever at the moment of the social impact.
Of microinsurance? Yeah, I mean, I think the problem is that it's relatively young and then there hasn't been enough time for people to capture the data. But hopefully what they can do is learn from the experience of microfinance and more traditionally microcredit, and see the pitfalls of not measuring any impact, because it's a pity to have to wait 30 years to find out that it wasn't working. So hopefully they can look at this, with the benefit of hindsight and say, we need to consider impact measurement right from the outset. So I assume that that's what people are doing, but I mean it's a relatively young sector, so we'll see if that's actually going to take place.
No worries. Well, thanks very much, you.
Thank you.